One. And welcome everybody to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Blake Moore, who's president and CEO of Touchstone Investments with approximately 25 billion in assets under management. Blake, welcome to the show.
Adam, great to be here, coming to you from beautiful, sunny Cincinnati, Ohio on a gorgeous day. Nice to be here.
I love it. I love it, love it, love it. So Blake, I have a lot to speak to you or ask you about today. I always like to begin. Can you tell us a little about your background, your story, how you got to where you are today, please?
Yeah, Adam, I probably got into the asset management business pretty much the same as everybody else did. You know, history major in college, thought I would go to law school, ended up playing 6 years in the NFL. Eventually did go to law school and somehow found my way into this business about 30 years ago, fell in love with it, and have been leading or overseeing investment management, asset management businesses ever since. Great business to be in.
I love that. So you played professional football, that's correct? For 6 years?
Yeah, hard to believe. It was a long time ago, but yeah, I played 6 years for the Bengals and for the Packers.
Wow. And then you went to law school afterwards, but was it somewhere in law school or after law school you said, this is not for me, I want to go into investments, or where was that pivot?
Well, it's actually, I was a business attorney for a few years, and then it was very serendipitous, a cold call came in, an asset management firm was looking for general counsel, and I applied way above my level and got the job.
Wow.
I'm sure it was on potential and not on actual ability. I was working at the time in San Diego for a firm called Nicholas Applegate Capital Management. Those of us that have been in the business for a long time remember that name. They were one of the first true growth / momentum managers heyday in the 90s. So worked with them for many years and then several firms since then.
Okay, I know that this is excellent.
I started, and as I said, I started off on the legal side, but I apparently I wasn't very good at being a lawyer, so I started running or overseeing other parts of the business and stopped being a lawyer many years ago.
Very nice. So tell us a little about your investment strategy. I know you have several mutual funds and ETFs, and you've built just hats off to you, super phenomenal offerings here. Can you tell us a little about how you view the world?
Yeah, I'd love to. And it's all summed up in our tagline, distinctively active. And this is one of the things that really attracted me about Touchstone when I joined a few years ago. And to tell you the real story, I have to start with my feelings about being average. One of the things I love about the investment management business is that, generally speaking, if you're average, you're not going to succeed for very long.
Right.
And that applies whether you're on the wealth management side, the portfolio management side, the investment management side, because average is a commodity and average is easy for people to get almost anywhere. So how do you set yourself apart? How do you show and prove that you're better than average? And in our business, the investment management business, Adam, of course, the definition of average for us is very easy, right? It's whatever benchmark applies to whatever portfolio strategy you're talking about. If you're in U.S. stocks, it might be the S&P 500, it might be the Russell 2000, whatever it is. You have a benchmark, and that is the average. So our whole premise at Touchstone, and it's supported by our slogan, distinctively active, is that we are set up to create better than average results for those that invest in our funds. That's our DNA. That's our whole business model. We believe if somebody just wants average, there are plenty of places to get it. You can go buy average really cheap. You can buy an ETF, you can buy an index fund. And oh, by the way, you don't actually get average, you get a little bit less than average because it's always cost you a little bit to buy that fund. So if you want to go buy a little bit less than average, plenty of places to do it. Touchstone is not the place to do that. And our business model, the other thing I love about it is that we actually outsource. We actually hire sub-advisors for each of our mutual funds. We go out and find sub-advisors that are going to manage money in that distinctively active way. That is not like the benchmark, not index hugging. Give us your 50 best ideas, not your best 300. That's what we want in the portfolio. We're out there looking for those sub-advisors that are going to manage our funds in that way. So right now we have 15 sub-advisors on our roster that are sub-advising either our mutual funds or our active ETFs. We can talk about our active ETFs in a bit if you like. And every single one of them is vetted and screen to make sure that they're going to manage the money in a distinctively active way. That we believe is the only way people are going to have an opportunity to do better than average. And the other thing I've learned in life, Adam, over many years in this business and in life in general, is that when things are really important in life, average just doesn't cut it. So when it comes to financial planning, financial goals, achieving your investment goals, I just don't think people should be willing to settle for average. And that's what we're about at Touchstone.
Absolutely brilliant, Blake. I absolutely love it. So just to help the audience understand here, what you do as a Touchstone is that you say, okay, listen, we want to have actively managed portfolios. We're not going to manage themselves. We hire outside managers who specialize in one thing, whether that's growth or it's value, whatever the case may be. Duration, you have many, many different offerings here. And then that manager, you make sure that based on their performance going forward, continues to generate alpha, which by definition means it gives you above average returns. Is that correct?
That is correct. We basically have a team of people who spend all their time researching asset managers. And then once we hire one, doing diligence on them to make sure they're doing exactly what we hired them to do, which is to produce long-term alpha and beat the benchmark consistently over time, which we believe will deliver wealth to people that choose to use our funds. Of course, our clients are primarily financial advisors. We work through financial advisors. So when we talk with our clients, financial advisors, our discussion with them is about adding our distinctively active funds to their clients' lineup to help them achieve their financial goals.
Yeah, the vast majority of our audience here are independent financial advisors, so you can speak very well to them. And we have a lot of inquiries about ways to generate alpha. That's just the question for everybody out there. How do you get above average returns? So, okay, I love that. So let's talk about fundamentals and technicals. And you said growth back in the 90s, and that kind of rang a bell in my mind's eye. How do you define yourself as an investor? Do you look at growth in a traditional sense of using fundamentals? Do you look at technicals? Do you look at both? And when you look at metrics when to hire different sub-advisors, are you looking for just performance irrespective of their investment strategy? Or, can you speak to that a little bit, please?
Well, it really depends on the fund, Adam. So if you look at our roster, we have over 30 actively managed funds today. And I'll use mid-cap as an example. We have a mid-cap value offering, we have a mid-cap growth offering, we have a mid-cap offering, and each of those is managed by a different asset manager. They're all sub-advised by a different firm who are very good at the specific way they manage money. And so they're going to differ in terms of their approach, but ultimately, at the end of the day, they're all pretty much fundamental bottom-up managers, making sure they're picking companies that are consistent with their investment philosophy, right?
Got it.
And again, with our funds, with our approach, when we're only hiring managers that are going to put 50 or 60, sometimes as few as 30 or 40 names in a portfolio, they better have really high conviction about the companies they're putting in their portfolio. So one of the things I love to do each quarter is I listen in on the quarterly updates from each of our sub-advisors and hear how they're thinking about the market, the economy, macro things. But then they always also get into a conversation about the individual companies and stocks that they hold. And what always strikes me is a couple things. One, how well they know their companies. Like they know them inside and out. They know the good, the bad, the ugly. They know exactly why they hold them in their portfolio.
Right.
And the other thing that always strikes me, especially when we've gone through a really challenging market like we have over the last 12 months, is even through that market, even though they might sell one or two here or there because things didn't work, they still have high conviction on the companies they bought a year or 2 or 3 years ago and believe there'll be value creation from those companies over the next several years. So it's always intellectually stimulating to hear them talk about their portfolio and how enthusiastic they are about their holdings. It also makes me very optimistic about where we'll be a few years from now.
I love that. So it's you're looking for fundamental undervalued stocks that have the growth component to it and then generate value over time that way.
And again, it's not necessarily undervalued or growth. It depends on the portfolio. We have some very high growth portfolios. We have value portfolios. So it depends on the portfolio and it depends on the sub-advisor that we put on that portfolio.
Yeah, no, I love that. Okay, let's talk about risk. How do you manage risk and what are some mistakes you see people make with respect to risk management?
Luckily, I'm not going to apply this to my own personal examples because we would be on here for a while. Um, so especially when you're running distinctively active portfolios with high conviction, we have to be really sure that our asset managers have risk as a really important component of their portfolio, not just the stocks they choose, but their portfolio construction. So when we vet a sub-advisor, an asset manager, and put them on a portfolio, their risk process, how they think about buys, holds, and ultimately their sell discipline are a really important part of the hiring process for us. So it's one thing to be just a great stock picker, and I've known a lot of good stock pickers in my career. It's another thing to be a good stock picker, but also be able to construct a well-balanced, risk-conscious portfolio.
Right.
And that's what we try to find in our asset managers across the spectrum.
Love that. So yeah, somebody on the show actually gave me a great line, which Blake, I'm sure you'll appreciate. He goes, Adam, we're not buying and selling stocks, we're buying and selling risk.
That is, and we have some of our asset managers actually talk about their risk budget, how they're allocating risk within their portfolio. It's such an important part. And as you know, and as most of the financial advisors know that'll be listening to your show, making sure that you're not getting too much of the downside when things do go down. Hey, look, we're in the markets. They do go down from time to time. We don't always have 12-year bull markets. That's an important part of the equation, as important as it is to capturing that upside when things are going well.
Let's talk about some timeless lessons you've learned along the way: business, life, sports, average performance, anywhere you want to go with that.
Yeah, well, we talked a little about my feelings about average, and yeah, some of that was generated on the playing field at the NFL, where indeed, if you were average, you were looking for a job the next year. But I think human beings, investing is such a human behavioral process and experience, right? And we humans, one of the things that we have a challenge with is you can call it recency bias or being anchored in the past. And we tend to be anchored in the recent past. And you couldn't come up with a better example of what we've just gone through over the last 12 years. And I've been in this business for over 30. So I've seen my share of bulls and bears and financial depressions and real estate bubbles, et cetera. But think about the last 12 years or so before the bear market. We had a consistent bull. The market just went up. Things were great. Wow, it just is always this way, right? And passive investing during that time period sounded really good. Why do I need an active manager? I'll just put all my money in the S&P 500. Everything's great. But you know what? It didn't last forever. Funny how that works out. But we as humans have trouble dealing with the fact that things aren't always going to stay the same as they were last year or last week or last month even, right? So, and when we talk about investing, of course, history is good context. Past performance is something you have to look at and view to understand what's going on with either a portfolio or an asset manager. But when you're investing, it's all about the future. Mm-hmm. You're not buying what happened 100%. A month or a year or 5 years ago.
Right.
Investment by definition is what's going to happen. Right. So it's so important to understand who you're investing with, who's managing your money, what risks they're taking and what risks they're not taking, and what your opportunity is for outperformance over the long term. But that's all forward looking. And it's hard for us to do that as human beings, right?
No questions. Have you read my book, Blake, by any chance?
Well, apparently I should.
My goodness.
That has to do with psychological analysis would certainly apply to me. I might be a chapter in your book.
So, I mean, you're a few chapters. So looking forward, I literally have it in the book where I say you want to look to the right of the chart. Most people get confused because they look to the left of the chart. Like CPI came out today. That tells you what happened by definition in the past, but the market's forward looking. That's one thing which confuses people. And then the anchoring and recency bias. I literally have a whole chapter in the book dedicated to cognitive biases and how people make, biased decisions instead of unbiased decisions. So I'm interested to get your views.
It's fascinating, right? And look, and it's so hard because we humans are so, it's so hard for us to, what is it they say? Pain is a greater motivator than greed.
Losses and pain. Yeah.
Risk so losses are harder to take than gains, et cetera. So it's a big challenge. And for your financial advisor audience, they're dealing with that every single day. You know,
No
we
question.
get that at Touchstone. You're our clients. We understand every single day, and I have a financial advisor. Every single day you're holding someone's hand. And I heard we had a speaker at one of our conferences say one of the best things I thought about financial advisors and their value to their client. The financial advisor is what stands between the client and stupid.
I love that. That is
Isn't
so
that
good.
funny? And yeah, it's really true, right?
That's so
Gee, you
good.
call your financial advisor, the market's down, I want to sell everything. No, we have a plan. Remain calm. This is what we're doing. We're not selling everything. You know, the value that financial advisors bring to their clients is just it's fabulous. My wife and I have worked with the financial advisor team for 20 plus years now, and if I were giving myself advice, it would be to have started sooner.
I love that. That is such a great line. And it's so true and it's so powerful. Okay, let's talk about some timeless mistakes you've made or you've seen people make, and how do you avoid them?
Well, it kind of goes to what we've talked about, right? People tend to react instead of going back to thinking about their plan. So let's start at the beginning. The best advice would be, particularly on the financial side, have a financial plan, work with a financial advisor, and then stick to the plan. Reassess it, of course, every so often, but your financial advisor will do that with you. So often on the financial side, we don't think of it that way, right? We plan a lot of things. We plan our careers, we plan our days, we plan our vacations, we plan most things in life, or we try to. But this whole money thing, for whatever reason, seems to be a big mystery. And
Yeah.
I don't want to plan. I don't want to worry about that. I just pay my bills. But there's so much that you can do if you just lay out a plan and then stick to it over time. You know, I've got two grown. My wife and I have two grown kids. We got grandkids. But one of the things we stressed with them from an early age when they went out into the workforce is get a financial advisor, put together your financial plan, start saving. You know, all those fundamental things that we talk about, but it's hard to do, right?
Yes.
Again,
Yeah.
that's why a financial advisor is so important. You got that personal coach there to make sure you're doing your push-ups and sit-ups and the financial planning every day.
That's what it goes. Like, we all know we should, losing
And we
weight
know what we should do, but
right.
it's really hard to do it.
Yeah, simple but not easy. I love that. Okay, let's what about the best advice you give your 30-year-old self?
Yeah, well, on the personal side, it would be to talk less and listen to my wife more. But we're well
Like
beyond that now. My 30-year-old self is much older now. Think long term. Again, I'm going to go with the investment side.
Sure.
Think long term. Allocate your risk budget and your portfolio with a long term horizon for your retirement assets, and then stick to that plan. And the other thing I do is I would get some help. You know, one of the things, I laugh. I see the meme investing and the day traders and then it always ends badly, Adam. I mean, now you see the stories about how it all ended badly. This is a complicated business, right? There's nothing easy about it, and it's not. You don't win by being lucky. I mean, you can play the lottery if you want to have a luck investment strategy, but this business is hard. Professionals make a difference. Good asset managers make a difference. Financial advisors make a difference. All this is statistically backed up by plenty of research. So, don't kid yourself that this is a do-it-yourself venture, right?
Right.
Feel free to assemble your grill in the backyard when you have some spare time, but I would not advise assembling your investment portfolio and your financial plan on your own.
Yeah, it's funny. I just got a new grill last week, and I called someone to come do that because I'm lucky if I can tie my shoes in the morning. So I couldn't agree with you more.
So many years ago, talk about personal life lessons. We got a grill, and I told my wife, I said, "Oh, don't worry, I'll put it together." And I finished. I was so proud of it. And she came in and looked at it, and she said, "So what are all these nuts and bolts and washers over here that you haven't put on the grill yet?" And I said, "Well, I don't know what those are. They must have been extras." So we just kind of ignored all that. You can't afford to have all that going on in your investment portfolio. You need to have somebody that really knows what's going on.
Right. I love that. So Blake, next question for you. The Superman picture behind you. I love it. Just curious if there's any story to it.
So the caption on it says, "Ha, told you chains of green kryptonite couldn't hold me."
Nice.
So it's a classic old school Superman poster. It's literally been on my wall since I was a teenager. Um,
Wow.
and Yeah, back in Chattanooga, Tennessee, where I grew up. And I think my dad or somebody got it for me a long time ago. So it's stuck on my wall with thumbtacks. And then when we sold that house and I went away to college, uh, that house was sold, and one of my little brothers was there, and he realized how much this poster meant to me. So he literally pulled it off the wall and saved it for me
Wow.
and sent it to me. I think it was after college. But the thing is so beaten up, you can still see the thumbtack prints where I used to have it just thumbtacked up. One of the arms, if you look closely, has a tear on it. The arm was ripped off at some point in its life. It's now reattached.
Wow.
But I keep that poster with me to remind me that even when you have your toughest day, your toughest things going on with you, there are ways to overcome.
I love that. So let's go there for a second. How do you handle adversity? We're talking about above average performance, and that's your world, the alpha side of it. What do you do how do you handle adversity, and how do you overcome adversity when it happens?
Yeah, boy, that's a good question. Again, that's probably another chapter or two in your book. So and part of this is just, what I've learned through living life. But I do believe that hard work and discipline are a big part of dealing with, many things in life, but also especially adversity. Because if you don't have a discipline about what you do and how you approach things, when you hit a roadblock or when something pops up that's unexpected or you're faced with something that's really a challenge, you don't have anything to fall back on.
Right.
And everything just seems to fall apart. But if you have a discipline to the way you approach life, the way you approach challenges every morning and expect to do something good every single day, adversity is just part of the roadmap, right? And you deal with it as you do with the good things that come along in life. So I just, but you have to have that mentality, that discipline, and the willingness to work hard through adversity. I learned that on the playing field too, right? A lot of people have talent, but a lot of people aren't worth to put in the work to get the results that talent is. Otherwise, that talent's wasted.
Yeah, I couldn't agree with you more. A lot of people on the show, they have a morning routine or they have some kind of consistent thing they do to help put them into an alpha state or a positive state of mind. It's just curious, do you have something that you do on a daily, weekly, monthly basis, or even quarterly reviews you mentioned with your sub-advisors? What do you do to help you stay focused and then goal driven and then constant growth?
Well, from a personal standpoint, I'm in the gym every day. I mean, that's just
Okay.
part of my routine early in the morning, and that gets my mindset to hey, this is something that you have to do every day. It's important, and also gets the endorphins running and everything good to go. So when I get to work in the morning, I don't need any coffee. Let's put it that way.
Okay.
And then the other thing that really gets me going is just being able to work with the people on my team here at Touchstone. So I've got a great group of colleagues. We enjoy working together. The culture is fabulous. So coming to work every day is fun, despite any challenges that we might have throughout the day or the week or the month.
I love it. And then what is the best way, Blake, for people to get in touch with you?
Well, my email, blake.moore@touchstoneinvestments.com. I joke with the financial advisors because I send them notes or whatnot from time to time. And if they email me back, I think sometimes they're shocked that I will promptly reply. So happy to share thoughts or engage with anyone that cares to drop me a note. I do answer my emails. I warn you in advance. And that's the easiest way to get a hold of me. I'm also on LinkedIn, but I'm as my head of marketing would say, I'm still learning.
Got it. Me too. Me too. Well, beautiful. Blake, thank you so much for coming on the show. It's been an absolute pleasure.
Really enjoyed it, Adam. Thanks a lot. All the best.